What's going on, everybody? I hope everyone is doing well. In today's video, we're going to be going over supply and demand. This is, in my opinion, maybe the most important trading strategy or technique, whatever you want to call it, but it works for penny stocks, options, forex, crypto, so it's one size fits all kind of thing. But this is very important to learn, so if you guys do want more videos on the topic, I will be making those in the future. But in this video, I'll be going over a quick overview of what supply and demand is, how it forms, how we trade it, and giving you guys some live examples of trades that we took yesterday using this so we can see it in real time. Okay, so just a quick explanation. What is supply zone? So a supply zone forms whenever we see a imbalance on the sell side. Okay, so it's similar to a resistance where we see a sell-off. Okay, so in this one we have a consolidation, so a period of consolidation, and then a strong sell-off. All right. So there's no bouncing, there's nothing here until we start consolidating again around here where we see more buying. And then from there we break up. And that forms a demand zone. Similar to a support, it bounces off a zone. Alright? So what happens here is if you're playing on the long side, you're going to be looking to enter a position at the demand zone with a stop loss a little bit below that demand. Okay? And then you're going to be taking your profits near that supply or right into it. Alright? You're going to ignore everything that's going on in between or outside of these zones. So we see that this was caused by someone that wanted to sell, let's say, 10 million shares of Apple. Okay, so here there's a big order, and 5 million of those shares just got filled here, but there's still 5 million that someone with big money is looking to trade. Okay, so supply zones aren't created by, let's say, someone sitting in front of a computer screen at home, selling 5 shares. That's not what makes the difference. This is big money trading a stock, depending if they're buying, it's a demand, if they're selling, it's a supply. But this all happens because of big money, and that's what we want to look for. That's what moves the markets, all right? So if we see here, we see that we sell off, let's say 5 million shares of those 10 million got filled here, all right? That market maker is still looking to get filled on the remaining 5 or 5 million. Right? So he's not going to move his average price down. He's going to wait it out until it comes to his price. Okay? So he waits and it gets filled. And on top of his order, there's also people seeing that it's a supply zone there. So they're adding on top of that selling pressure, and it causes more and more of a drag down. All right? So then the same thing happens with the demand zone. If they're entering a long position, we see someone with big money bought here. All right? That creates a demand zone. Okay, so we see this as a support range. This is where we want to enter. So let's say I'm playing the long side. Let's say I'm playing calls, right? I take an entry right here off demand, and my price target will be the supply zone. So I enter here, supply zone. I ignore everything in between here. My stop loss is below the demand zone, and that's it. So usually what I like to do is play that second test. I don't play that first supply zone formation because we can't really be sure that's a supply zone right there until we see that there isn't a significant move down or move up from the zone. All right, so we see here, I would look to play, let's say if it's a supply zone, I'd want to play puts off the second test. So not this one, but this one, so that re-entry. On the demand zone, I would not look to play an entry here. I would look to play it here because that's the second test. And so there's also something to note that's also important. After a zone test too many times, maybe after 2 or 3 times, I don't play it, or I'm more cautious with it because that means the orders already got filled or they're close to being filled fully, right? So for example, let's take a look here. Supply and demand zones also will not always be intact. They will get broken. They will get, switched out for something else. So, they are always changing. It's not going to be a one time and you use it forever. It's not going to stay between that zone. All right. So we see here from demand gets into supply. I would probably exit in that supply zone, but it breaks out and it continues. All right, so that supply zone isn't valid. If you were someone that was entering a short, your stop loss would be above this high of the candle right here, and you would be able to play it, with a good risk to reward. So you would take a loss on a put if you entered in the supply zone, but demand zone, you'd get a nice profit. So it's not always going to work. It's all about maintaining your risk to reward. All right. So let's take a look at some real-time examples from yesterday. All right, so let me put up the chart here. So we've got the SPY right here. This is on the 5-minute. That's usually where I map out my intraday supply and demands. It does go up to, maybe 1 hour, 2 hour, 4 hour, but usually I map it out on these levels. So let's take a quick look here so we can get a better understanding of what's going on. All right. So what we're looking for, let's map out a supply zone first. All right. As we saw here, a period of consolidation or wicking, both work. Just areas with large amounts of selling that we see repeated, levels at. So what happens here? We see this is a supply zone. What I can see on SPY is something similar. We got that first test and then a sell-off. All right. So here was that test after that breakout of high of day. We formed a supply. If we break it down to the 1 minute, it's much more clear and you can see what I'm talking about. Let me show you guys. It starts consolidating at that high of day range and it starts selling off. All right. So let's say you miss that first, where'd it go here? So let's say you missed that first entry. Okay. You have your second zone right here that you are looking to play. So you play your puts right off this zone, straight down to VWAP. That can also act as a price target other than demand zone also. But this is where you take your profits, for example, okay? Now you're going to watch for a re-entry off that third test of the supply zone. Here it goes. So test right here, okay? Bounces down a bit, bounces back up into the zone, and then straight down. All right? So this zone is strong selling. So this is a supply zone. Let me mark that down. Supply zone. So this zone right here is a strong supply. This is where we want to enter a short, a put, whatever it is. This is where we are looking to enter. If we're playing the demand side, for example, let's say we entered around VWAP, this is where I will look to exit, right? Let's say we entered VWAP here. This is my supply zone. This is where I am looking to exit, okay? So both ways can be played. So also let me mention this. The way you want to draw the supply zone is you want to include most of where the consolidation or wicking is. So you want to include those areas. You don't want to make the zone too wide as well. You want to include the key areas where you can see most of the action at. All right. So let's switch over now to a demand zone. All right. So we see there's an area on SPY that had a lot of buying. Okay. So we take a look back here. I'm seeing right here. So there's a wick all the way from here, and this is also something important I forgot to mention earlier, but same way that if a resistance breaks out and it comes back to retest, it's now going to act as support. So if a supply breaks out and it comes back to retest, it's going to act as a demand, okay? So here it was acting as supply, it broke out, comes down, now it acts as a demand. All right, so let me also switch this color so we can get a better one right here, okay? So this is now a demand zone, all right? We have our demand zone. You can buy any area in demand zone stop loss below this low right here. That works, okay? Our profit target would not be the supply zone if we're in the trade from here because we haven't seen this form yet, right? We would have probably taken profits around this high right here or this one, okay? So let me just show you guys how I would play this around here. So you would enter on that retest of demand, perfectly comes down, test that demand zone. Okay. Bounces up, gets close to supply, doesn't necessarily hit it. But once you start seeing some weakness here, you can scale out or raise your stop loss or whatever it is. Don't have to necessarily wait for supply. I do like scaling out, but I'm not really a fan of entering a position if you're not in the demand or supply zone. So scaling out is fine. Yeah. But exiting, you can exit at whatever your plan is. All right. So we get that perfect test right there of that demand zone, wicks perfectly right off it, and bounces right up for a 4-point move. On options, that's over 100, 200%, maybe a little bit less or more, but that's a really good move. All right. So this is your demand zone. Let me mark that down and change the color as well so you guys can get a better look of it. All right. So this is your demand zone down here. Okay. This is where you want to look to go long. Here is where you want to look to go short. Okay. If you are in a long position, this is your profit target. If you're in a short position, this is your profit target here, okay? So we just took a look at SPY. Let's take a look at another ticker that's really common for options, okay? And let's see how that one acted with supply and demand yesterday, all right? So this is, again, another ticker that a lot of us like to trade options on. This is QQQ. So let's apply that same principle to this ticker, all right? So we see here we have a supply zone. Once again, we see there's a lot of wicking here. Let me change the color to red. Oops, nope, not that. So this is going to be our supply zone, once again. And we see one thing here. We see that it hits here, rejects, hits here, rejects, hits here, rejects, breaks out here, shows weakness, and still continues up and breaks down again. So it's a little bit messy here, and we want to, it's not something I'd really look to play. Probably would take a loss on that one, but there are times when it will break out of the supply zone, so it's not always going to be perfect. But for a majority of the time, we see supply zone test, reject. Okay, supply zone test, reject. This also counts as a test, kind of. Test here, and then a straight knife down. Test here, knife down. Okay, so it worked almost 4-5 times out of 6 right there. So that's a great, risk to reward take, in my opinion. So let me show you guys right here our demand zone as well, so we don't forget. But here I see is a lot of buying, all right, from where the body of the candle is closing, so the wicks right here, and where we saw the previous buying at. So let me also change this color to green. Okay. So again, this acted as a previous supply zone. Now it's going to act as demand. So it comes down, first bounce, okay? Forms a supply here. So you're looking to enter again for long in this demand zone. So it comes down to the demand zone. You enter, profit target could be VWAP, could be this previous high, or supply zone, any of those work, okay? And come straight to the supply zone, you're out. That's a 4.5 point move on QQQ options. That's going to be a big gain. That's over 150% again. Could be more or less, but approximately it's going to be a pretty big win. All right, so that comes out. Let's say you exit, you take puts now. You're still in as long as it doesn't break above this high of day. So it comes down to VWAP. You could scale out here. If you want to go a little bit more extreme, you could hold to demand, or you could just keep raising your stop loss. So there's multiple ways to exit that as well, but we see that was just one of them. So this one was a failed supply. Okay, so it didn't technically fail, but it would have faked out a lot of people because it broke the high of day and it came right back down. So that usually we don't see that right now. Is the time in the market where there's a lot of uncertainty with the FOMC meetings and all that. So it's something that's a little bit more different, but in a lot of times it's much more stable and less hard to trade like that. All right, so that's just a fake out right there happens. Keep that in mind. It's going to happen sometimes. So have that in the back of your head. All right, so ignore this one. Comes down to demand here. Wicks perfectly into it. Okay, and bounces to supply. That's another great trade right there. Great trade right here. Demand to supply, and then from supply, it closes down the day. Okay, so again, very simple strategy. It does take some practice to understand it. You can combine some things like level 2, time and sales, flow, whatever it is, into this strategy as well. But supply and demand, the risk to reward on these trades is great because you're not risking too much as you would, let's say, with a breakout. But it's much slower, much easier pace than, let's say, a breakout trade. All right, so both strategies work, don't get me wrong, but this is just something I find to be the best and something I've traded with a lot of my trading career. So yeah, I hope this helps you guys get a better understanding of it. I will be making more videos on supply and demand, maybe some live trades, but yeah, if you guys have any questions, feel free to leave some comments below. I'll try to get back to you guys, and yeah, I hope everyone enjoyed the video, and I'll see you guys in the next one.